Good afternoon, everyone, and welcome to the Share Series Monday Management Update. I'm Cristina Fernandez, Senior Analyst at Trustee Advisory Group, covering the home furnishing sector. And with me today is Clarence H, CEO of Havertys since 2003. Clarence is going to start with some brief prepared remarks, and then we'll proceed with the fireside chat. If you have any questions through the presentation, you can submit them using the question button on the screen, and I will ask them for you. With that, we'll get started.
Well, thank you, Christina. Havertys is a retailer, a furniture retailer located in 16 states from Virginia to Texas. We've got 121 stores. We've been in business since 1885. We consider ourselves a premier retailer of better quality furniture. We try to stay out of the fray of the promotional players. We have decorators in-house, and it's about 20 to 25% of our business. So we appreciate you being on the call.
Great, thank you for that introduction. So, let's start with demand. The environment that you're seeing, the consumer environment, is something that's very, top of investors' mind. On the last call in March, you talked about consumer demand softening a little bit. Sort of how you're seeing the overall demand for your business and perhaps for home furnishings as a whole.
Well, traffic is down from the pre-COVID, the post-COVID issues that we had last year. 2021 was a record year for us. We were up 35%, but we are feeling good about our deliveries. We're getting in a lot of product. We have a very strong back order and are filling those goods. So our delivered business is good. We did announce that our written business was down. That has continued. We will give you more detail when we release our sales, but we think that our consumer is in pretty good position. We're dealing with a better customer. They have cash. They have a very high priority on their home. And we're seeing some real strength there, particularly where we are, which is in the southern states. And so demand is still strong. It's related to housing, but we're having some kind of softening, particularly in traffic.
Yeah, that's helpful, and perhaps we can dive a little bit more. So can you talk a little bit more about your consumer? Because I know it's not the luxury consumer, but it's also not the value. So who is your core customer? What's the household income? And, we know housing is really a driver of home furnishings demand. So kind of what are the metrics that you're looking for, particularly with housing being, sort of in a period where it's changing with interest rates being higher?
We're dealing with a customer primarily in the suburbs. She has a family household income over $100,000 and higher in I'd say the 120 range in our major markets. She is interested in having her vision of her home, and we help her with that because we have our decorators. Our average sale is right at $3,000 compared to, let's just say, some of the promotional houses would be less than that. Wayfair would be in the 200 range. And then if we get a decorator involved or a decorator in the home, it's double that amount, right around $6,000. So we are also located, as I said, in the southern states. Our biggest states are Florida, Texas, the Carolinas, and Georgia. So we're located where people are moving. And so that's one more reason why we feel good about our position and the continued importance of the home in these markets.
I mean, so to that last point, would you say that, so you're looking at migration trends, obviously home values in those states are pretty high. How do you think about housing turnover and sort of the overall health of the housing market as it relates to the impact it could have on your business as you plan ahead?
Well, housing is a very important indicator for our business. We have said that new home sales in the South is the best long-term predictor of our business. And it's also a very good leading indicator. Existing home sales is important, but probably because of where we're located, the new home sales is a little bit better predictor. So that has been impacted, as you know, by the interest rates and the pricing, but housing is slowing, but it's still strong. I mean, it's going from 100 miles an hour to a slowdown. So we still feel like housing is going to be good for us in our part of the country. It was a positive today for the South, and most of the housing growth is in the South. So it's an indicator. It has slowed, but it's continuing to be important, and I think will help us in our business.
Very helpful. Perhaps you can talk about the industry and promotions. We know promotions sort of at the more value-oriented retailers have come back. Some companies like Target have been very vocal about their demand for home furnishing slowing down and having excess inventory to clear. So I guess how much are you watching sort of what's going out there in other players, and what stance are you taking, sort of balancing preserving the brand and profitability, but at the same time driving some demand, particularly with the use of kind of promotions?
We haven't seen aggressive discounting in our industry yet, and certainly we're not changing our promotional calendar and how we go about it. We are a little bit more aggressive in our credit because credit's become more important, but we haven't seen discounting across the industry. I think our buyers were very good in working through all of this surge and then slowdown. We don't see that inventory will be an issue with us or being over inventory. We were very disciplined in the kind of product that we were buying. We knew what was selling. A lot of what's coming in today is sold. We're bringing it right in and delivering it right away, particularly in case goods. But I don't see that we're going to have the problems that you saw with Target and Walmart. They were very aggressive in certain areas and had a slowdown in some categories that they may not have had much experience in. We don't expect to see that be an issue with us. In fact, most of what we're bringing in today is turning around and going right back out. We are in a better inventory position. We do have more inventory than we did last year, which is a good thing. We're going into the summer holidays, 4th of July coming up, Labor Day right behind it, which is the most important holiday of the year. And I think we're going to be in a good inventory position to cover our customers.
Yeah, and that's a good point you made about your inventory position, and you and other home furnishings retailers that cater more, that do more special sort of custom work and are very different position than the mass retailers. So perhaps you can talk about your custom order business, how big is it of the business, and maybe how your inventory, sort of how you plan for inventory it's different than others in the industry.
One of the nicest growth areas we're seeing right now is in special order and custom, and that's because during the pandemic, many of these factories had to extend deliveries out. People that weren't going to wait on custom and special order. We're also able to get more of our designers in people's homes today, which helps with our custom and special order. It ran about 20% of our business. It's now up to about 25. We think it can get higher than that. And as I said earlier, it's a bigger ticket. It's more of what the customer wants, and it helps lead to a bigger transaction for the entire home. So special order custom is a growth area for us. It'll continue to be a growth area because we're able to execute on it now. Our factories are able to deliver the product quicker. The lead times are coming down to be able to satisfy that kind of customer.
Great. I wanted to switch to a different topic that's also top of mind for investors. It's really supply chain. There's a lot going on, maybe at a high level. How is it affecting Havertys currently, and what are sort of like the biggest challenges you face as a company?
There was enormous disruption. All of the things you hear about impacted us significantly, particularly because we import a lot of product from Asia. So the container issues, the trucking issues, the ship issues, all of that was real. Vietnam, where we get most of our case goods, was shut down for 4 or 5 months, and then had a slow comeback from Chinese New Year, which significantly affected our case goods business, which is bedroom and dining room. We were, in many cases, almost out of that product, out of that business almost. That's all coming back. Vietnam is back producing, I would say 90%. And we're getting our lead times down. We're fulfilling the back orders I mentioned earlier. And now we're to the point now and into the summer of being able to give 4 to 6 week lead times for upholstery and some for case goods, where in the past we couldn't give them any lead, or maybe 4 months, 5 months, 6 months. So we're seeing a lot of that improving. We feel good about it. Freight costs are a real problem. It was higher last year than now. We have negotiated on some contracts with our carriers. We expect to see improving rates there. We've seen spot rates come down, and that I think will continue to slide. So China did not have a major impact on when they locked down, but and that was because most of our vendors have workers on site and the port stayed open. So we didn't really have a big impact from China's lockdowns, but most of our import issues were related to Vietnam. So we're in a better inventory position today, and we're fulfilling the back orders quite well.
All right, so it looks, at least it's moving in a positive direction as it relates to Vietnam and the inventory position for the company.
I think we're in a good inventory position now. I don't think we're going to have any issues with having to have markdowns to correct that situation. We did expand our main facility here in Brazelton, which allowed us to be able to handle the product flows up and down. I mean, there's surges. We're seeing a surge now, but as I mentioned, most of that product is coming right in and going right back out.
So looking ahead, it seems like Vietnam's getting better. China hasn't been too much of an issue. I guess, what is your biggest concern? Is it really fuel prices? And perhaps, I guess we'll have to see how the West Coast negotiations get resolved. What is still, I guess, a challenge on the supply chain?
Yeah, if the strike that could happen on the West Coast would obviously impact the whole country. We are bringing a great deal of our product through our Savannah location here that serves Brazelton, and most of our product comes through that facility. We're watching it closely. I don't expect it to be an issue for us, but we certainly are watching it and making sure that we're staying on top of the different issues.
And a secondary effect of the supply chain challenges has been cost increases. Can you talk about the cost inflation that you're seeing, whether it's raw materials or fuel, labor, and how are you offsetting that, whether it's price increases or efficiency gains? I guess that would probably be a good topic to talk about.
Well, we've seen increases across the board. We're seeing it with labor, we're seeing it with freight, we're seeing it with the price of the products. We are passing those price increases on, and we've been able to increase our gross margins. We feel strong about that. We do want to increase if we have increases, and we want to maintain our double-digit operating pre-tax profits. And we think we can. We've been successful in that. It's Havertys branded product that we source, we develop. All of it is exclusive to us, except in the mattress world. So we feel like we were able to maintain those kind of margins and increase our prices as we're having price increases, not only in the product, but in our personnel and our freight, everything that everyone else is seeing too, and the fuel costs. So all of those issues are real. We've been able to stay ahead of that.
One question we asked a lot of companies when it comes to price increases is, I guess, what makes you feel comfortable that you can continue to raise prices so that the consumer can absorb them? Because they have been pretty big in some cases, double digits on a high ticket item. I guess, how do you think about your absolute prices and staying competitive and not really losing demand because of inflation?
Well, I'd say since COVID, you're right. Prices are up double digit since COVID. A lot of it is because of the customer we're dealing with. And I think we have a competitive pricing model that allows us to do it. It is product exclusive to us. They're not going to be able to find the same product somewhere else. We have to provide a service level and back that up better than anybody else to justify the price. And I think that's part of our mission and our culture, and we're able to execute on that. I don't see the need to discount, to cut the pricing to make it sell. We are very careful about bringing in the right product and pricing it the right way.
One thing I wanted that we didn't talk earlier was about competition. So in the markets that you operate in, who do you view as your primary competitors? Is it other sort of retail chains? Is it independents? Maybe you can address that.
Well, the two major players probably, in our markets are Ashley and Rooms To Go. They sell the most furniture. Ashley's the biggest player in the industry. They're a manufacturer. Rooms To Go is a retailer almost exactly in our footprint. So, but they're very promotional. We have taken a strategy of making it clear to our customer base that we're different than those companies, with our special order, with our custom, which they don't emphasize, and many of the stores can't execute or not even interested in it. And I also think that we've tried to move into a consideration set that we might not have been in the past. I think we're very competitive with Ethan Allen. We're in their space. We probably weren't before. We're competitive with Pottery Barn, Crate and Barrel. We're in their consideration set. And Our House and Restoration Hardware are over us. They're in the price ranges that are above us. But I think our value compared to them is very good. And I think that's how we're perceived in the marketplace, is we're good value with very good quality and good design. The promotional end of the business, Bob's, Value City, IKEA, I mentioned Rooms To Go, are not in the same realm that we are, even though, of course, they're selling furniture and have a big share of the market. So we've tried, and I think effectively, to separate ourselves from that end of the business and to move into the more design-oriented business, even though we're not a design house. It's 25 to 30% of our business. We're selling furniture like anyone else, but just a better quality.
Yeah, that's very helpful and a good overview of the industry. I wanted to talk about the specific initiatives you have to grow the business, and there's a couple of areas you've been very focused on. One is retail stores. So you recently opened a store in Austin and have a couple of more planned for the year. How do you view sort of the opportunity to continue to increase the store base over time?
One of the things we've realized and learned in the last couple of years is that we can do very well in a smaller footprint store. So we're now looking at store sizes in the 30,000, in some cases less than that, square foot, compared to what used to be our model of 50,000 square feet. So there are more opportunities for us to move into markets that we're not serving with the smaller format store. We are looking at In our larger markets where we might only have one store, looking at a second store in several of those markets. And I think there's going to be real estate available for us that makes sense in that range. We have articulated in our strategic plan that we want to open up 5 stores per year. And that's net per year because we're always relocating stores, but and that's aggressive for what we've done historically. That would be within our distribution footprint, which would be 16 to 18 states. We're in 16 now. Anywhere where we could reach within the distribution footprint we have. So we think there are going to be opportunities for us. I think there are going to be more happen in the next 6 to 9 months because I think there's going to be fallout in our industry. There's some people who grew very fast and were very aggressive, and now that things are slowing down, won't be able to manage it. And I think there will be good opportunities for us. We like taking over existing boxes and converting them to Haverty stores. We do some stores we build when that's the only way in, but we have been very successful at converting existing boxes to Havertys, and most of what we're developing now is in that realm. Christina, you're on mute there.
Apologies for that. So following up on that, when you are looking for new locations or looking to relocate, like what is sort of a good location for your business? Like who do you want to be next to? Like what sort of trade area is preferable?
Well, we want to go where our customers are. So high growth markets. I'm going to be out tomorrow, this week, looking at some locations in an existing market for relocation to where the customer is growing. And usually they're power centers. It might be freestanding. We've done a good job of taking over H.H. Gregg stores. We've got a couple that are in the works right now that are in the 30 to 35,000 square foot box that we convert. We prefer freestanding stores, but we will go into a power center and convert that to one of our stores. So we want to go where our customers are and move with them. That may be a mall, but we don't like mall locations. I mean, most of us, we have one mall location. Most of our stores are in what you would consider a power center, and we would have a premium site in that.
Another initiative has been e-commerce, and you, I don't know if you've launched it already, but I know you've launched this summer. I think perhaps you have. Can you talk about the new website and sort of the changes that are coming that will make it for a better experience?
It's a major project for us. We're relaunching our site. It's going to be now late summer. It's a complete remake of all parts of our system. We're using the Adobe suite of products. We recognize the importance of the website. Everybody goes there, and I'll say everybody, almost everybody uses the site in order to find out about us and what we sell. We're only doing in the mid-single digits of pure internet sales on the site. Everything's transparent. You could either do it online or in person. It doesn't matter. But we think that with an improved site, that we could get that mid-single digit number to double digit. That would be a target. I don't know how quickly that would happen, but I really believe that with what we're going to launch here, which is the major project we've taken on this year, I don't think we've ever had a project of of this significance in the internet world at all. So it's half of our investment in IT this year is dedicated to this launch, and we're very excited about that hitting later this summer.
No, that's exciting. And I know consumers, and I think particularly in furniture, but most industry do a lot of research, online and through the process. So yeah. I'm sure that will be value added. So from the customer perspective, in addition to sort of like a new look, like what will the consumer be able to see that's different or new from what they are seeing today? And would you be able to capture more data from your back end too, in addition to sales penetration? Like, what are there any other sort of data or for business planning that you would be able to do that you haven't been able to do in the past?
I think a customer is going to see that it's going to be a lot more customization. We're going to realize what kind of furniture they're interested in, give them back more inspirational design of how that works. I think our business intelligence will be significantly better. It will move much smoother. It'll be faster. You'll be able to find what you want easier, and to make the transaction easier. And I think today it's just not of the caliber it needs to be a leader in the industry. And I think when we come out of this, we will have the best home furnishing site in the industry. And that's what we're dedicated to doing. And that will help us drive our in-store as well as our online business.
Great. I look forward to seeing it in a couple of months. One other initiative I wanted to ask about was you've been expanding some product collections, and it looks like adding some new product lines. Some of it is through third-party warehouses. Can you talk a little bit more about that? How big of an opportunity could it be? Are there categories that you're not in today that you want to sell but not want to take a bigger inventory position or bed?
We call this the curated collections. We've worked with a number of our vendors who carry the inventory in their warehouses. It's expanding the opportunity for different products for our customers. It's frankly today mostly for our designers to fulfill what the customer wants to complete the vision in their home. There's a lot of occasional accessory type of things. Outdoor furniture is part of it, which we don't have a line now, but we're developing, and we'll have that next year. Office furniture, unique upholstery, different designs. And it also helps us determine where the customer's interests are. So from what they're telling us, we will then bring it into our product line and brand it Havertys if necessary. But in this particular case, it's not our inventory, yet we can get it to the customer in a timely manner. So we've learned a lot, and it's expanding. It's at a small base, but it's expanding, and I think it'll be important as we grow our business in the future.
Thank you. So we have a few minutes left, so I wanted to kind of shift gears a little bit and talk about profitability. So it seems like you're comfortable in being able to maintain your operating margin, perhaps even grow it, even with the cost inflation you are in. So maybe can you talk about the sustainability of your operating margin, and perhaps where it could go even if demand slows a little bit?
Well, what I said earlier is double-digit pre-tax margin, and I think that's our objective. I mean, last year we were I think 12%. We had certainly when business is growing, we think we could leverage that. I'm not planning that. We're not planning that. We think that we can maintain that this year, and we haven't released our sales estimates, so we don't give estimates. But we feel good about our backlog. We feel good about the promotions and the position we have in place. We feel good about our inventory position. So we think we can maintain that double-digit pre-tax margin. Yes.
And then another question would be on your capital allocation. You've recently increased the dividend, and you also have a pretty sizable, cash balance for your size. So what are the priorities in, where do you look to invest your cash and deploy capital back to shareholders?
We do have a very strong cash position. We increased our dividend last quarter by 12% to 28 cents. We've paid a dividend every year since 1935, and we've increased it every year since 2013. So a dividend is part of our culture. We announced a $25 million stock buyback, which we're in the midst of, and we'll tell you more about that in our release in August. We've had special dividends. We've had two the last 2 years. That's something our board considers every year. So we returned to shareholders last year $94 million, and stock purchases was over 41 million, and dividends of 17, and a special dividend of 35. So we've been consistent in returning cash to our shareholders when we feel like we don't have a need for it. So we're very strong in cash flow and our cash position. It's something we look at every quarter. And we are in the midst of a stock buyback that was announced earlier.
And as it relates to sort of the investments, you mentioned that about half your investment this year is on e-commerce, if I got that correctly. Going forward, I assume after the launch, that probably goes down a little bit. So is it mostly stores and just IT? Where would be the capital sort of expenditures going forward?
Well, we do have plans to expand our Virginia distribution center, which would be a significant CapEx. That's probably moving into next year. Just we're in the final planning stages of that. I would say that it would be more in the stores. I mean, we do want to grow, as I've said, 5 stores a year. I think there are going to be opportunities for us. We will continue to invest in IT. It's too critical for everything we do. But the main promotion, the main effort right now with the internet, you're right, should be behind us. But I'm sure there'll be other issues that will come up that'll be priorities in IT, as they always are.
Absolutely. Well, Clarence, I think that's the time we have today for this session. Before we close, I don't know if there's anything else you want to say before we ended.
Well, Christine, I really appreciate the opportunity to talk to you and to your investors. I think that Havertys is in a very strong position because of our experience and our tradition and how we invest in our business, but also because of where we're located in where most of the country is moving and dealing with a customer that can afford to invest in their home. So we think we're in a very good position.
Great. So thank you everyone for joining us. Thank you, Clarence, for your time. And it's great to hear about Havertys and learn more about the business and the strategic initiatives you have in place. Everyone have a great afternoon and see you soon.
Thank you very much.